We'll be updating you with what's happening as far as a few of the things and activities that we've got going. Hey everybody, so what I've got loaded up here, I'll take you through the systems I've loaded up. I'll just add a couple more in there as well. I'm going to go through mainly the futures tonight, Forex on Wednesday. Also, we're going to do the optimization, part 2 of our optimization on Wednesday as well. So there's a lot to get through and a lot of things to go over. Also wanted to talk to you a little bit about biases in the market and testing and why it's important to test up different concepts that we have as far as our trading. And I'm going to just take you through something that Damon did today as part of his testing, which reinforced the fact that the key levels are a critical area for your trading, and it's important to obviously identify where these key levels are, and we're going to be pushing this fairly strongly over the next week or so, couple of weeks, getting the key level analysis into, or the key level filter into all our systems. So I'm going to show you what Damon's come up with, and I'm going to share that as part of the group. So thank you for joining us. As I said, if you've got any questions, probably hold the questions towards the end of the session if you can, and we'll get stuck into it. So the first thing I want to do is basically take you through our what's hot list, and I'm just going to change the... Okay, so here you'll see that we've got a... Okay, that should be coming up now fairly clearly. So what you'll see here is I've been tracking the future systems, not so much from way back in January, but more recently, since the 1st of July, just to see what's working really well as the most recent systems. So our most recent systems and what's been working well. And you'll see there that one of the systems is turned off, which is system number 67. So if you have that system on, or you're tracking that system, or you're trading that system, you need to really analyse that. Some of you may have done a bit of work and have modified the days of the week to trading, but the standard system that hasn't had any modification as far as days of the week, then that definitely would be off. But as it stands at the moment, it's off based on system number 67. So we haven't made any real changes to that, but that system definitely would be off. Now let's go through the systems as we see them. So from the 1st of July all the way through, and I'm going to just hide some of this data here so we can kind of get a better look at how they've been performing more recently and fit that on our screen. So you'll see here that as we go through the systems, you've got system number 3, which has basically been around for almost 2 years, still continues to be one of the best performing strategies and systems we have, and it doesn't trade very often. Most of you, I think, have got it on your trading list, or you're trading, or you're tracking, and it's produced $4,140. Now, I mentioned last week about the TP. Now, I'm going to explain that again for those of you who weren't sure about that. So I'm going to go through an example here, but basically I've got the system number 3 with a new take profit and the old take profit. So there are 2 ways that system was developed. Well, the system was originally developed so it had a trailing stop, and I'm going to take you into the charts here in a minute and show you that. But you can see there that there's a fair bit of a difference between the new trailing, the new TP and the old TP. Now what it means is that the new TP is exactly how the system was designed. So it means that if you're trailing your system either long or short, once you break that trailing stop, so there's little cyan green dots if you're long and red if you're short, then once it breaks it by the value you've selected, then you get taken out. However, that's not how the old TP works, so I'm going to explain that in a minute. But you can see here that there's a difference between the two. Now, and also in the results as well, like I obviously haven't got all the results loaded up here. What is really interesting is if we have a look at crude oil, and these are 2 new systems that Brett has sent through, so system number 82 and 83, You've got 7:35 to 9:05 is the time that he's got trading there, or 9:10, sorry, and you'll see that the results are quite different. So the new TP and the old TP, because it's a bigger time frame, it's definitely got much different results, and you can see those results are panning out there. You can see that the two systems are trading very differently, and that's because it's a bigger window as far as time, and obviously in a bigger window of time you've got a different dynamic working with the two different stops. So this is almost like trading two different strategies. I mean, the end result is very similar. You've got, there's very little separating the two systems, but how they get to that final result is quite different. So you're definitely, if you are interested in having a look at that system, I'm going to post that up tomorrow, and if Brett's okay with that, and we'll share it, because that's going exceptionally well. Like that system, those two systems are trading beautifully. So they're the same system, but obviously a different stop strategy. Now the interesting thing here is that that with those two systems is that, and I was just going to say here, they have clearly outperformed, except for obviously the Russell, every other system. So these two are running hot. The Russell again continues to perform well. The drawdowns are very, very small. When it does have a big week, it has a really big week. And one thing I wanted to mention about the Russell is it's got a fairly solid trade target profit, so it's about $1,050. So what you want to do with the Russell strategy, which is system number 64, so how many people have we got in the room who are currently trading that or monitoring it? So how many have we got that are keeping an eye on system 64 or trading it or watching it? Yeah, there's a couple in the room. So what I was going to mention there was that you may want to keep an eye on the volatility on that, because when the volatility starts to drop on the Russell, you might find that you may have to adjust the targets. And I spoke about this exact issue with Brett tonight. So today, that if the volatility drops off, obviously the ranges are going to get a little bit smaller. You may need to do some adjustment on the targets, but that's something we can kind of keep an eye on as we go along on our weekly update. So a couple of other things to mention here are that, as I said, system number 64 flying along. That's one of Giovanni's, so well done there, Giovanni. He's not in with us at the moment, but he'll probably pop in later. And these two down here, which is 82 and 83, kicking along nicely. We've also got system number 70 on crude. That's performing well at 6585, and then you've got the wheat. Now wheat has been interesting. I'm going to bring up the chart on wheat because this is a really good strong performer. But you can see here that if we look at all systems, if you were trading every single strategy here, there hasn't been, apart from the 5th of August, that was a pretty tough week obviously. We still ended up getting through, but that's with the addition of these two systems here. So that was probably the toughest week on the futures. The previous 2 weeks have been pretty flattish, they haven't been great, but as we start adding systems in, you can see the overall performance is picking up. So what I'm going to do is just show you a way in which you can remembering that when you're trading these systems, there is a number of ways you can approach how you actually trade the systems. And when we talk about adding systems to your portfolio, there's a number of ways you can do it. You can do it with, the question that most of you will be answering as part of your trading portfolio plan is, what strategy will you incorporate as your profit grows? So will you use a delta rate of increase? So basically, will you trade with a single market with money management? So you say trading crude oil, you start off with a delta of $1,000, as you get a delta increase, you're starting to you add another contract, so you go from 1 to 2 contracts, and you're slowly working your way up with your money management. And for those of you who haven't, I'll just better actually change this over to that document. Just give me 1 second. For those of you who haven't done the money management exercise yet, you'll obviously the delta concept may be a little bit unfamiliar, but the concept of adding, you've got a number of ways you can increase the size of your, as you develop up profit in your account. There's a number of ways you can approach how you actually grow your account. Now you can do it using money management on a single system, which means that if you're trading a single system, then you're solely relying on that system performing well all the time. And we know that every system goes through a drawdown. So what we have to manage is, okay, well, if we just trade crude oil, if we go back to that previous example, there were a couple of weeks where crude didn't make any money. But if we use, say for example, 2 markets with money management, then instead of relying on the one system as we saw in that example with the multiple systems, where if we add another system, that helps to smooth out our drawdown and increase our profit. Now the other interesting concept or idea is that we, instead of adding contracts, so instead of, once we get $1,000 worth of profit, we add a second contract, so we're trading 2 contracts, one on the Russell and one on crude. We get up to $13,000, so we're up for our next rate of increase. We go to 3 contracts, 3 on Russell, 3 on crude. Instead of doing that and basically adding contracts as we start to make money, what we can do is we can add systems and add a system increase and no contract increase. So basically what that means is that every time we start off with a Russell, every time we get a profit in that account, so we go from from 10,000 to 11,000, then we'll add a second market, so we'll go crude and the Russell. And then once we get a second rate of increase, we'll go to crude, Russell and DAX, and so on and so forth. So as we're making money in our system, on our systems, we're just adding systems, we're not adding contracts. And then you've got the final stage of this is basically where you get a point where you've got, all right, well, I'm not just adding systems here, I'm actually also adding systems and contracts. So on the previous example, we would have been trading, say, the crude and the Russell 1 contract each. Then we would have gone to, have another rate of increase. We would have added the crude, Russell and the DAX 1 contract each. But in this example here, we're adding systems and contracts. So this is by far more aggressive, but it's definitely worth doing as an exercise to see when you go through your money management exercise and you're going through your money management activity, you'll definitely want to do this. You'll want to say, right, well, what happens if every time I get a rate of increase, what happens if I add a contract and add a system? Do I add a system, add a contract, or do I just stay with one system, add contract? So this is the thing you need to be thinking about as you start putting your portfolio management plan together. Now this will be a new additional module up at the end of the money management, so I'll be uploading this tomorrow, and this will be something that I'll get the pro traders to do. So if you've completed the money management module, you're going to want to go back and just download this document and start working through this as part of your portfolio management, because it's kind of putting it all together and putting together a process for you to combine systems, or at least look at what you're trading in the moment using Giovanni's spreadsheet and say, right, well, this is what I'm trading at the moment. Does this process that I'm doing, adding systems or adding contracts, does that match my risk profile? So am I taking too much risk trading in this fashion? And is it going to be appropriate for trading, say, my own personal account, or is it something that I need to consider if I want to trade within the unit class? Because obviously if you're looking at the unit class, your risk profile needs to be a lot lower, because you've got the 2, 6 and the 8% rule as far as your risk profile for drawdown. So when you're trading your own personal account, obviously you're managing your risk, but ultimately if you're wanting to build a track record up and move into the unit class, as many of you do, you've got to have that goal set up and work out what the overall risk is for you with your trading. So it's important to go through this exercise. As I mentioned before, this new module or this new lesson will be uploaded shortly. It just really rounds out the money management model, and I think you'll enjoy going through the whole process. So guys, that was the portfolio management plan, just a little bit of a brief look at the systems. So when we come back to the systems, which I'm going to do now, as I mentioned before, if you're only trading one system, now some of you may only be in a position to trade one system based on your base capital. So some of you may be leveraging off the Forex market and the ability to trade mini lots and run multiple systems, which is fantastic. So we're going to talk a little bit about that on Wednesday night, and talk about what's available to us as far as the bridge, as far as Dukas copy, multi-charts, what's all the different options that are available, MT4, etc. So guys, that was basically that was what I wanted to cover off today. Any questions on the futures? As I mentioned before, one of our systems is off, but we'll be adding probably about five or more system numbers here over the next week. So I'm sure we're going to have a plethora of new strategies to be tracking and watching. So there's no shortage of those. And the other news is that our momentum system we will be releasing our momentum system and our MT4 system shortly. So I know I've been saying that for a little while now with the MT4, but that's definitely close to being released. The only thing that needs to be done on that is basically the security on it, and then that'll be available for everyone to have a look at. So so the momentum system is the next one that I'm going to be previewing. So once that's finished and finalised, I'm going to basically run through some of the strategies in the room. And what's exciting about that, and this is a good segue into the next topic of discussion, is we're going to have in the momentum strategy and all the strategies that we have, we're basically going to be building in the key level filter. So what is a key level filter? Let's have a look at our platform here, and I'll just explain what a key level filter is. And the reason why this is so exciting is because the key level filter is such an interesting part of the system, in that what it allows you to do is allows you not only to take out trades that are lower probability setups around the key level, but it also allows you to add the key level filter to these counter trend reversal type strategies where you're looking for confluence of a trade. So let's use an example here. So let's say, for example, that I'm looking to get into a trade here at looking for a buy setup. Oh, look at that. That's a perfect buy setup there. So we've got a buy setup, let's say testing 1, 2. Just make sure that it has anybody else lost me at the moment. So testing 1, 2, 1, 2. All good? Okay, fantastic. Okay. All right. So the key level, the reason why the key levels are so important is that they appear on the charts all the time, obviously, because at every chart there's a key level. And when I talk about the key level, what I mean is that I'm talking about these 175, the whole numbers, basically, not the 50s but the hundreds. So I'm looking more at the hundreds. So if I'm trading this strategy, and let's take coffee here on the 89 tick, for example, and we'll just bring up the data window as well. So for those of you who are unfamiliar with TradeStation, or just getting your getting a feel for TradeStation, all I went to is View Data Window, and then I populate the data window. And what I can do with the data window is I can actually pull that down, and wherever I put my cursor on the screen, that'll actually populate into that data window. So we have basically a key level here, and the key level is set at 175. Does everybody agree that that's a key level there? So what we're finding very interesting, I'm going to show you some data in a minute, and this is on behalf of Damon, who's done some super analysis on the euro. So for those of you who are currency, who have got a strong association with the currencies, you're going to enjoy this analysis. But let's do it on coffee for a minute here. So the key level, when we talk about a key level filter, what we're saying is, well, Sam, I've picked out 175 because that's a key level. So all I'm saying is that the definition for a key level is a level that is around the 100 mark. So 175, 174, 173, 172. That's a key level. Now you can use key levels as major pivot areas, major support resistance, but for the purpose of this, what you're doing there is if you're using areas like pivots, or sometimes you'll get different pivot points, you'll get different interpretations of pivots. So for consistency, let's just work on the whole numbers, the 175, 174. If it was the currencies, it'd be 123, 122. I'll show some more examples in a minute. But let's say that this is a setup. So is everybody on the same page here with the key levels? Have I made myself clear on the key levels, or do you want me to go into a little bit more detail? All good? Yep. Okay, great. So with a key level, what we're wanting to do is we're wanting to at least have in our strategy, 169 can be a key level, absolutely. So what we're wanting to do in our strategy is we're wanting to have something that allows us to filter out trades that set up right on a key level. So why do you think there may be less of a chance of a trade being successful right at a key level? What do key levels traditionally mean to you as a trader? Now, the main theme of these sessions over the last couple of weeks has been really good because we've had a lot of audience participation. I mean, I know you guys don't have mics, but if you can type in your response, that'd be fantastic. Everyone's been joining. It's been great. So strong areas of supply and demand. So the markets are based on supply and demand, support, resistance. They're barriers. They're price barriers, aren't they? So what we're looking for is areas that potentially could be turning points in the market. Now, obviously, when we're trading, there's no guarantee that if a trade sets up near a key level, it's not going to either work or not work. We don't know that. We need to, any time we talk about a different concept or idea in this room as part of our training, what's the one thing we have to do when we raise an idea or a concept or a methodology or something? What do we have to do when we do that? What's one of the keys that we have to do to test it? We have to absolutely test it. That's right. Because even though I might be saying it, it has to be objectively tested. That way, the stats aren't going to lie. You're proving your method up with statistical analysis, which is the only way to go. So let's have a look at this. We've got our key level. Now, interestingly, I've just picked this one up on the chart. On these two occasions here, okay, so two occasions here we get rejection at the key level point. All right, so this one doesn't quite hit it. But what's interesting is within 10 points of that key level, we get basically a fade of the key level. So we've got two things that we can do here. We can say, right, well, in our strategy, which is a trend trader, we know that if this was a fresh setup, that would be our entry point. Does everybody agree that that would be our entry point? We've got a cyan break of resistance. That would be our entry point for the trend trader. Let's just disregard this area here, and we'll just say that's our first trade entry point. Everyone's happy with that. And had we have had a key level filter here, this potentially would have been a trade that would have been eliminated from our trade list, because our filter may have been, right, well, I'm going to take, if a trade sets up within 10 points of a key level, I'm not taking it. So what we want to do is we want to say, right, well, I've for a long time been very suspicious of key level trades, in that I believe personally like a reasonable amount of testing on this, and I believe that this will give us an edge going forward. So I believe that based on what testing I've personally done, that we should be able to improve our results if we put a key level filter in. And it's been something that we've been thinking about doing for a long time, but we just haven't got to that, got to a point of putting that filter in. Fixes for this week that are coming out. Yeah, so Jim's back. Hey Jim, how are you? So Jim, welcome back. He's tested on crude, we've tested on DAX. So let's have a look at that. That's an example. So what could we do as traders to take advantage of key levels? There are two ways we could trade a key level or not trade a key level. We've already mentioned one. We could use one as a filter, and we could say, right, well, when we get a momentum set up around a key level, we're expecting that we've got a lower probability of a setup. We're going to test it and validate it. So that means that we could eliminate that setup from our system and basically improve our overall results. What's the other way we can trade a key level? I mentioned, yeah, perfect, cycle on the pullback. Anything else? Can we do anything else? As far as you've mentioned two systems, there's probably a couple more that we could throw in there with the key level that really would work beautifully on the key level. And I mentioned this in the MACD presentation when I spoke about Confluence, and I mentioned it when we spoke about the reverse the trade, and also that reversal strategy. So the reversal strategy, anything where you can get an added advantage or some type of area of support resistance, and you're looking for a potential reversal or to fade the trend, then that would be an opportunity for you to take a potential trade. And what do you think would be the advantage of taking a trade near a key level, apart from the fact that you've got potential support resistance? There's also that opportunity for a fairly tight stop, isn't there? Because we talk about reward to risk. So if we were, say, for example, looking at this setup here and saying, right, well, we've got a trend. We've now got, if we're looking at our counter trend or our end of trend setup, what we need to see is we need to see resistance set up on for a potential short. We need to see a key level set up, and then we're looking for an entry point on that. Once price hits resistance, we might have, say, I don't know, a 20-point stop. But have a look at the move on this trade. So you straight away start to see the potential for these type of setups. Now, if we add in volume divergence in there as well, if we're looking for confirmations of exhaustion or confirmations of a turning point, you start to stack these things up, and what you've got is basically, right, well, you've got resistance, you've got a key level there which we know is currently in the market. We could potentially add our volume indicator in here to show us volume divergence and a volume spike. And then once we start stacking these things up, we've got a potential for a counter trend trade. Now, what's the advantage of taking setups like that for us as far as our risk to reward? What's the advantage straight away you can see on a trade like that, where you're getting in at a key level, you've got a fairly small stop, and you've got the potential for, even if you use the trailing stop, you've still got a fairly significant move there. So what's the advantage for us? Because remember, what we're looking for, low risk trade, exactly, Sean. We're looking for a low risk, good reward to risk. We're looking for opportunities where, we're stacking the odds in our favour, and there's no guarantee it's going to work. But you don't have to be right all the time to do exceptionally well with these strategies, because the key is reward to risk and that average trade net profit. Now, if we're looking for this thing to give us a 6, 7, 8, 10 to 1 reward to risk, all we really need to do is be batting at around 30-40%, and we are miles in front as far as our profitability. So these are the setups that we can include when we start adding this key level filter, and it's exciting because what I got Damon to do, and some of you have already done as well. I know I've got most of the pro traders have been through this exercise, but I'm going to show you what Damon did because it just reinforced the fact that it's a really good exercise to do this, and I want to show you what Damon came up with, and I just think he did a super job on this. So well done, Damon. What Damon did was he tested the trend trader, so the Euro US dollar trend trader, and what I asked him to do was basically I asked him, okay, so what I got him to do is I said, right, well, Damon, I believe that there is a definite advantage to having a 10 points before and 10 points after key level filter. So what I want you to do is I want you to have a look at that as part of your testing. So he's obliged by doing that with his testing, and he's basically looked at 2 bars, so 5 pip Renko, and he's looked at 2 bars before, 2 bars after. So in this column here, which is our column K, you'll see that he's got his trade list there. There were a total of 39 trades taken. Now where he's got the green highlight is basically where his winning trades are. And so there's his net profit. Now what was interesting was that basically for this exercise, the overall profit or loss for the exercise was end up with 39 trades. This is taking trades before the key level, so within 2 bars of the key level, so 10 points. The overall result was that it was negative $991. There was only one substantial winning trade which delivered pretty much most of the profit. Let's have a look here. No, that was on the other one. That's on this side. So there were a couple of, there was a 540 there and a 490. So there were 2 big winning trades. The rest of the trades were fairly ordinary, running at 35%. So what is the first thing that you can see of that data sample that we're looking at? On the key levels, so if you look at the key levels there, you can already see that if I add this filter to my trading, I already know that I'm going to take out 39 trades out of the equation. They're net negative. So what's that going to do to my average trade net profit? What's that going to do to my win rate as well? So it's going to have the benefit of increasing my percentage win rate. It's going to also improve my average trade net profit. And it's going to basically take me out of trades that obviously are net negative. So trade setting up before the key level, it's showing a definite advantage to have that filter in there. So then we said, right, well, what happens with trades that set up after the key level? Well, the key levels, Sam, are basically for the purpose of our testing that we've done, the 100s, exactly how I showed you there on coffee. So 175, yeah, so they were the key levels Damon tested on. So on the currency, on the euro or the pound or whatever currency you're trading, you're just looking at those whole numbers. Now, those numbers are already in the market. They're key levels. So we don't really need to worry about having to try to, anticipate where they are. They're already there. So it's up to us to determine whether we're going to take the trade based on the key level or not. And the only way to do that with automation is to have that coded in as part of your strategy. So you would need to have a filter in your strategy that says, right, well, if I get within 2 bars of the key level, I'm not going to take the trade. Or you might do your testing on, say, the pound, and you might say, well, it worked really well on the euro US dollar, and it's been so consistent. I wonder how this is going to go on the pound US dollar, and you might find that it doesn't work as well on the pound, or it might work as well on the euro. So even though we're saying it works well on the euro US dollar, do we have to test it up on all the other currency pairs, or do we just automatically assume that it's going to work on every pair if it works on the euro US dollar? So what's the answer there? Do we test it, or do we take it for granted? Yeah, so we have to test it always. So basically with the 2 bar after, what we had here, we had one monster trade, 11.89. So obviously price just broke through that 2 bar and went. But that was really, apart from this 590, that was the biggest trade. Now again, we had 42 trades, our win rate was 26%, and we were down 720. So we almost had a loss key level before and after of almost $2,000. So that tells me that straight away there is a huge advantage to having a key level filter on the Euro US dollar, without a doubt. So what I want to do is basically make sure that we as a group have the ability to add this key level filter in, because there and someone asked a really good question today. I think it was David. Said to me, all right, well, I've tested all my strategies up, so what do I do now? Like you're giving me this key level filter, what do I do with that? So all you do is basically you say, right, well, I've got the key level filter. What I do with that is I basically run my strategy. So we'll go back to TradeStation. By the way, great work on that, Damon. That's fantastic analysis. There's been a few others, like Nick's done a great job on his. He did a similar thing as well. There's been a few guys who have put together some really good stuff. But what I want to do is go back to TradeStation for a second here. And I just want to go through the example that I wanted to mention here. So when we talk about, all right, well, I want to add this to my strategy, or I want to add this to what I'm doing, what we're wanting to do here, and I'll just minimize this down, and we'll go back to monitor 1. So back to our key level 175 on coffee. If I'm going to have this as a filter, say I've got coffee, or we'll even go to one of or to system number 3. We'll go to our system number 3, trading nicely. You can see there, nicely there. So all we would do there is we would say, right, well, system number 3 is tracking along beautifully, but what I'm going to do is I'm going to add the filter in here, and all I'm going to do, so it would be in your format strategies area. It would just come up as a key level filter, so it'll be somewhere down here that Michael code in, and it'll have a +10 or a -10 or a value that you select as true or false. And if you put the filter in, then basically you're just testing your strategy. So all you're doing is you're trying to say, right, well, does that give me an advantage at all in the system I'm trading? And if it doesn't, well, then you don't use it, do you? But if it does, then it needs to be considered as part of your trading. Now, what's one thing we don't want to do when we add a key level filter? Now, if we go back to that, well, if you think about that data set, if you add a key level filter into your trades, and then you've tested up, you've done your testing, and you can see that it's net negative by, it's $900 or, $2,000 over the last 6 months, and you suddenly get a big winning trade. What don't you want to do with your testing if you suddenly have, say, a $900 winner? What's one of the biases that we tend to be exposed to when we're day trading? Particularly if we're day trading and we're manually trading. Optimism bias, and what's the other one? Short-term bias. Yeah. And a recency bias. Perfect, you got them all. So we've got a good group tonight. So this is good. So let's look at it. Optimism bias is the bias that it's in the members area. I posted a video on it. It's where we expect that things are going to turn out better than they are. So if you're typically an optimist, you'll always be thinking that things are going to turn around. But we're objective in everything we do, aren't we? So we can't afford to have an optimism bias. We just have to be objectively testing everything. So if, say for example, we set up our key level filter and we get that $1,800 winner, then we need to put that into our data set, and we need to continue to track our results, because even with an $1,800 winner, we're still going to come out at break even. But what's going to happen? We've had almost 100 trades and we're at break even. So what does that tell us? If we've had 100 trades and we're at break even, are we actually making money on 100 trades at break even? So why would we even bother to then turn on because we've got a recency bias and a short-term bias and an optimism bias, we've still got to be objective, don't we? So anytime you think that things are changing, you've got to really objectively look at what's happening with your systems and say, right, well, is this time to change the idea that I had, and am I changing it based on a bias, or am I changing it based on objective assessment? So that's really critical there. All right, traders. So that was a little bit of a walkthrough of the systems, as I mentioned. A couple of things I want to quickly chat to you about. The first one is as I mentioned when we were going through the results there, this TP stop. So new and old. Let's go through and explain that in more detail. So the new TP, and I'll just explain the new TP. The new TP is exactly how the trailing stop. So this is your TP, your take profit or trailing stop. So if we're in a long trade here, which we are, then we'd be tracking this. Say we've got a negative 5 offset for our stop. So as price moves up, this is moving up nicely. We're still in the trade. It's not until we get to this point here where we start to basically we would get knocked out. So you can see there we're in there at 91.85. So at 91.80 we're out of the trade because we've got a negative 5 point stop. Does everybody agree with that? So we would be out there. 91.80, done. Okay, so that is the new TP. That's exactly how that strategy is supposed to work. However, the first time this was coded up, for some reason, when the system lost its green dots, it didn't hold the stop there. As soon as it lost its green dots, it basically said, right, well, I've lost the green dots, I don't have a stop, just the initial stop, bang, down here. My initial stop, say, 20 points or whatever the value is. There's my initial stop. So it would lose this stop here, and then it would, and then basically once you got the green dots back, the stop would start trailing again. So bang, now what would happen typically is that if the green dots came back into play and price was below the stop, because here's 85, so 91.80. See how price is above the stop? So just here, there's 91.80. So it's thinking, all right, well, stop's back here. Then the green dots come up. Now, if price is above the stop, it's going to continue on as thinking that we're still in a trade. However, if you get these green dots and prices below that stop, it'll automatically market you out. So what it's doing is it's saying, right, well, instead of properly taking you out over here, it just keeps thinking you're in the trade until it turns back to green again and realizes that the current price is below where your stop should be, and it's like hitting the panic button. It says, right, oh no, strategy realizes I should be out, exits you out automatically. Now the trouble with this is that's an incorrect interpretation of the system. However, what we've found is that by having the system run like that, it actually is more profitable than it's showing more profit than the new TP in some instances, as you've seen. So if you do test up your system and you go into your system and you see, if you go format strategy and you go, right, well, okay, I've got this trail TP, new TP, what does that mean? Well, if you set it to new TP true, it'll take you out exactly how the system is supposed to take you out. However, if you set that to new TP trail false, then it'll go back to this kind of hybrid type stop that we've got floating around in the system that seems to be very profitable but isn't the true reflection of how the system's traded. So you've got to make a decision. Do I want to... and what it's basically doing is it's giving you much more room to be right on your trades. Because as soon as, if your value here is greater than -2, and this, you lose the green dots, you won't automatically be taken out, because it usually takes about -5 to, once it goes past -2, you'll get your red dots come up. So that's the reason why you've got the quick change between the system. Does that make sense? Have I explained that? It's not an easy one to explain that. So is that clear? I just want to make sure it's. I've recorded the session, so if you want to go over it a couple of times, you'll be able to go over it in the recording. It's just not an ideal situation, but it is definitely more profitable. Now, the other thing we've fixed up, and many of you have done, okay, one more time. All right, well, okay, so the new TP will take you out at -5, as we know. Everybody's crystal clear on that one. If you set -5 as your value, then once this system breaks those green dots, you're out at -5, no questions asked. It will definitely take you out. However, on the old TP, basically as soon as you lose these dots here, so as soon as your dots go to red, it's going to, and as you can see how it goes to red? If that doesn't knock you out by the time that dot's printed red, then you'll lose your stop here, and you'll only have your initial stop. So you'll be stuck with this initial stop down here, and your system won't have a trailing stop, it'll just have the initial stop of 20 points. So you'll have a stop in the market, and then once your dots turn back to green, which they do here, it's going to say, right, well, what's going on with my strategy? Should I be out, or am I trailing? Yeah, you don't have to use a new TP. You can use this. So basically what happens is, once it goes back to the green dots, it's automatically looking to see, right, well, what's happened with my strategy? Am I out? Am I in? And it's looking and it's saying, right, well, where's price? Well, price is here. So, okay, I'm fine. I'm going to continue to trail. So I'm trailing up. I get up to here, 91, say 96. So my stop's at 91. Now, unfortunately here, if you lose these green dots, then basically you've lost your stop. So then your stop comes down to here, and it will then say, right, well, your stop won't reappear then again until you get the green dots back. And obviously once you get these green dots back, it goes, oh, I should be out, I'm going to take you out. So sometimes it works in your favour, sometimes it works against you. Obviously here, you've given a lot of money back on the old TP, haven't you? But in some instances, this can be a very, very profitable trade and style to trade. So it's whether with your testing, you want to have a fairly big stop, because that's what it comes down to. You're going to have a fairly large trailing stop, or you want to go for the exact TP stop. No. As soon as you get the red dots, Muzz, so as soon as you get a red dot appear, that you lose the green dots. So once these red dots come up, you don't have green dots. You can't have both at the same time. Okay, so now we're going to go and talk about the support resistance. Now the support resistance is a good one, because I'm going to send out a video of it today or tonight, and the strategy fix. Now the video is up in the members area under the Trend Trader video, but I'm going to go through it one more time. The support resistance, and what you want to do is you'll probably want to go back and test this, because we've improved it a little bit, and you might find that the results come out a little bit better. So support resistance is where you get into the trade here, as we know, and then your stop doesn't move until your support bar prints. So this is your support bar here. So on a long, we're looking for support to print. Obviously, if you've got a 5 pip stop or 5 point stop, you're knocked out here. But basically, if that had have held that level, then your next level would have been there, and then eventually you would have got taken out. So I usually work my stop a couple of points below the support level. So there's your first support level. Second support level prints up there. So with this support resistance stop, it actually is a great way of giving yourself a little bit more room to track some of those bigger trade setups. So guys, that's what I wanted to cover tonight. Basically, the TP fix, I wanted to go over the support resistance. I also wanted to make sure that everybody was aware of that the new and old TP actually worked like that, because some of you weren't sure about that, and I needed to explain that in a little bit more detail. I wanted to go over the key levels. That's going to be an interesting update for the systems. And the other thing I wanted to cover off on too was that the new systems that we're releasing. So the ones that will be coming out shortly will be the momentum strategy that I've been talking about, and the other one that'll be coming out, or there's two others that we're working on. One is the MAE MFE strategy, which is basically, many of you would have tested that up in your trading. So we're going to make that system available to you as part of the system library, or at least give you access to that as a bit of a trial to see what you think. And the other one is the MACD one that we've been looking at as well. So we've got a MACD key level pivot trading type strategy that I'm going to be taking you through as well, which is more a swing trading strategy. And I've been chatting to Brett about that, so it's kind of a bit of a concept we've developed up with Brett. So and it ties in with a bit of our MACD reversal, but it's taking it to a little bit more of a bit of a different level in relation to swing trading and holding positions for a lot longer. So guys, they're the three strategies that we're working on at the moment. What else have I got to update? The bridge for MT4 is ready to go, so you would have received an email on that. Now, I've sent an email out to everybody, but you don't need to have the bridge. But if you do want it, if it's something that you're considering, then just email gmtfutures@gmail.com to request the bridge. gmtfutures@gmail.com, and we can get that set up for you. Now, the advantage of having a bridge is that what it does is it basically, and Giovanni brought up a really good point today, is that you'll be able to use the bridge not only in MT4 but in other applications as well. Like you potentially be able to use it in NinjaTrader. So if you've got another broker platform, we can tie it into that. So it's a fantastic option, not only just for the currencies but for the futures as well. So for those of you who are wanting to get exactly the same trades in the cycle trader as you are on the continuous contract as you are getting, or if you're wanting to match up the continuous contract with the current contract, and sometimes you don't always get exactly the same results, you're going to find that having a bridge between TradeStation running off the continuous contract will give you the best results that you'll get out of TradeStation. So anytime you load that continuous contract up and you can get trades running off that, particularly the cycle trader, then that is definitely what you that's going to give you your best results as far as your execution. Yeah, we'll have them available in all the systems, Nick, definitely. Guys, that's it for tonight. The key levels, once Mike's finished them, we'll get them out and we'll put them in the strategy. There'll be a strategy update one. All right, traders, thank you for your time. Have a super couple of days, and I'll see you on Wednesday. We've got a big session on Wednesday. Okay, traders, thanks for your time. If you did enjoy the video, please feel free to just click on the like button below the YouTube video, and that'll help us to keep posting these videos up on YouTube, because we'll be getting some feedback, which is great. And also, if you'd like to become a GMT Pro Trader, please email info@gmtfutures.com for more information. You can also visit our website at www.gmtfutures.com.